Well, good morning, everyone. It's Travis Cadman here with Arizona Investar. I want to thank you for taking time out of your morning or out of your afternoon if you're in Eastern Canada for joining us for our exciting new lease-to-own program that we're just launching here now for our Arizona market. And the presentation today should take about an hour to get through, 45 minutes to an hour. And we're going to talk a little bit about the Arizona market, who is Arizona Investar, and then we're going to get right into the lease-to-own program so you can hear exactly how this program is going to work and maybe how it could benefit you and your investment objectives in real estate. Today, I think we got looks like about 55 people on today, so it's going to be a great show. And we got people on from Canada, from coast to coast, pretty much from BC all the way through to the Maritimes. So it looks like we got a good lineup, good show for everybody here. If you want to ask me a question through the course of this webinar, feel free to do so, and you can do so just by typing in your question in the bottom on the right-hand side of your screen there in the icon box. If you look at the bottom, you'll see a chat box. You can just type me a message there, and then I'll get the message here on my end, and hopefully I'll be able to get through as many questions as I can. I have some very common questions I'm going to go through at the end, but if you have a specific question, feel free to write it right in the chat box and then press send, and then I'll be able to get it from you. So again, thanks everybody for joining us this morning, and look forward to hearing your feedback on this program. We're pretty excited to get this going and in the Arizona market. Arizona Investar, as I think most of you know, is a turnkey real estate investment provider both in Canada and the U.S. And right now we're really heavily focused in the U.S. market, specifically in the Arizona real estate market. We've been in that market for about the last 25 years, in and out of it through the different real estate buying trend cycles. And right now is definitely a buy opportunity for us. So we're pretty excited to get this going and get it made available to our Canadian investors and allow you to get access to the undervalued Arizona real estate market. So looking forward to getting that going. Just a quick snapshot as to what's happening in the Phoenix market today. I'm sure you've heard through the media that things are starting to turn around in Phoenix, and we're starting to see some upward pressure on prices. And that's caused primarily due to the shrinking foreclosure inventory. By no means is it over yet. We're not saying that, but what's happened is with the diminishing supply of foreclosures coming through the trustee sales, as well as the volume of buyers, probably 35% of those are investors coming into the marketplace, putting upward pressure on prices. So where we are right now, if you look at the market recovery analysis slide on your screen, you're going to be able to see kind of where we are right now. And right now we're kind of in this sector right here. We're just coming out of the bottom end of the curve, and where prices should be is up along this line right through here. And what we call this is the normalized trend line. And this is defined by where replacement cost is, so what's the cost of new construction, the amount of inventory in the pipe, and the amount of demand on the residential home markets. This is really where prices should be, and because of the subprime kind of meltdown that we had there a few years ago, obviously it created an overcorrected market. So we're still extremely undervalued from where they should be. So as a real estate investor, we love it because even though the single-family home prices have been reduced, it didn't reduce the rental income. So what we're seeing right now is just some great return on investment on a cash-on-cash basis. And the probability of appreciation is quite high because we've got to get up to here. And when you look at this line through here, and you can see traditionally where real estate values have been appreciating in the real estate market in Phoenix over a number of years, right here you see about 4 to 5% annual appreciation. So just nice real estate appreciation through the years. And then, of course, you saw the run-up in prices due to the creation of the subprime mortgage, where pretty much anybody could get a mortgage with a little down payment. And then, of course, it peaked up here in 2007. And that's what we call an overinflated market up through here. So right now we're down here in an overcorrected market. So we got some good opportunity, good buying opportunities for Canadians and Americans to get into this market right now. The purpose of this program today is really going to focus around the lease-to-own program. And so we're going to talk about that today. We're going to get into the buyer-seller protection plan and benefits of this program. We're going to talk about who is the target market, who specifically are going to be the buyers of your investment-grade properties through the lease-to-own program. I'm going to walk you through the step-by-step program structure. We'll get into how the numbers work and then how you can get started activating your investments in this marketplace with Arizona Investar. First of all, I'd like to talk a little bit about investing in real estate, and we'll talk a little bit about the pros and the cons of investing in real estate. Just like any investment, there's pros and cons, and you just got to make sure it's the right investment asset class for you. So first and foremost with real estate, you've got safety and security. Safety in the sense that you've got safety in knowing you're investing in a hard, tangible asset, something that's one of the core requirements of life. That'd be food, clothing, and shelter, and of course we're investing in the asset class of shelter. So everybody needs a place to live, and if you're investing in that asset class, and if you're investing in well-selected and well-timed markets with a turnkey provider, it's a fairly safe investment. You've got security in the sense that you actually own it. The title would be in your name. You can rent it out. You can turn around and sell it. You can put financing on it, and you can hold it for long-term cash flow, or of course you can enter into that lease-to-own program. With real estate, of course, you've got tax benefits that you typically don't get through some of the other traditional investments, and of course some of those tax benefits would be you can write off your expenses against your income to lower your total tax payable. You can utilize depreciation. So the IRS, as well as Revenue Canada, allows you to depreciate your wearable assets. So your housing structure you can depreciate. Thus allows you to pay less tax on an annual basis. So that's a great thing. That's one of the little gems in real estate is the depreciation aspect on it. We're also in an asset class that is an inflation hedge. As the cost of goods goes up, as the disposable dollar is diminished through inflation, of course you're in an asset class that keeps up with inflation. So as inflation increases, your house values will increase, and if you're a property owner and investor, of course it's an inflation hedge, because as things push up, your house values typically push up as well. You're in control of the investment, so you decide what you want to do, and we see more and more investors from across North America really taking control of their investments. With what's happened with the stock, bond, and mutual fund market over the last 25 years, and with what's happening with the retiring population today, a lot of them not having enough money to retire because their investments have underperformed. We're seeing a lot of people take control of their investments, and we see real estate as a big target of focus for those investors. So you're in control of your investment. There's few entry barriers, so for investors to get into real estate investing, it's pretty easy for them to do that, especially with a turnkey provider that's already done all the work, and has already gone through the process of finding out where to buy, how to buy, what legal structures to use, what tax structures and things like that. So there's few entries to barrier to get in. It provides residual income. So once you buy a house, if it's managed properly, it's going to provide you residual income on an annual basis. It also has historical track record. I think if you look at the last 40 years, and if you look at real estate as an investment asset class versus stock, bonds, and mutual funds, it is far superior than the typical investments as far as the net return goes to an investor. So you can see that. And with the turnkey system, such as Arizona Investar has a full turnkey program with proven individuals for all the different aspects that you need, you've got a pretty good chance of success with the program. A couple of the cons I think that you need to look at with real estate and you need to be aware of is one is liquidity. So it's not like a stock where you can just sell it tomorrow and get whatever cash you can from that the sale of your stock shares. Liquidity is tough. So once you're in it until the point in time you sell it or the market allows you to sell it. Again, you're in control of your investment, and I put this down as a con section because you're in control. Sometimes that's not good, especially if you're an amateur or you're investing in real estate and you've never done that before, you're investing in a foreign market you know nothing about. You're best really to go with a turnkey provider to assist you with that, because why would you make the mistakes that other people have made years ago and they've learned from those mistakes? Your risk is not limited to your initial investment. So what we mean by that is if you use leverage, and say you bought a house for $150,000 and you put $50,000 down and you had a mortgage of $100,000, so sure you have your risk is your initial capital, but you also have some liability on the mortgage side as well. So that's what we mean by your risk is not limited to the initial investment. Not knowing where to invest, of course, we have a lot of people that are going to Phoenix right now. They're saying, hey, it's a great time to buy. I'm just going to go find a realtor and I'm going to go buy a house. It's probably one of the worst things you could do because you're buying blind and you're buying uneducated. You really need to be with an organization that's going to walk you through that process. And it doesn't matter whether you're investing in Canada or the U.S. or you're investing in Costa Rica. You really need to do it with people who have done it for a lot of years that know what they're doing. So, so it's really important to know where to invest and how to invest. Affected by economic cycles and jobs, we see a lot of investors. They typically buy high and sell low because that's typically what they do with the stock, and that's how a lot of people invest. So you really got to know the economic cycles and trends, and that's really what we do from our perspective, is we watch those real estate cycles. No different than somebody might do with a stock, how you kind of watch the stock cycles and kind of figure out where to buy and when to sell. We do that except with real estate. So we actually look at the economic cycles in different markets throughout North America to provide our investors what we feel is the optimum, not only market, but time to invest. And typically real estate is a larger investment. It's tough to get into real estate with $5,000 or $10,000. You're usually into it with, you know, $30, $40, $50, $60, $100,000. So it's a larger investment. And for most people, diversification is difficult, again, unless you're dealing with a team that provides diversification as far as their operating platform for various real estate investments. So those are just some of the pros and cons of investing in real estate. Let's talk a little bit about owning a lease option property. And I'm going to first of all talk about what are some common names we've been associated with lease to own. Well, we've seen rent to own, we've seen lease options, we've seen lease to own, lease purchase. They all mean the same thing. They're all referencing what we call a lease to own program. So just wanted to make sure that you knew that when you hear rent to own or you hear lease to purchase, really what we're talking about is the lease to own program. Some important terms that I think are important that you learn here at the front end of this presentation, because we'll kind of use these through the presentation, and they're important for you to know. The first one is going to be rental credits or down payment contribution. So what that means, it means that which portion of the total rent that your buyer, if you did a leased option contract, would pay goes towards the purchase price. So we call those rental credits or down payment contribution. The next thing is the initial down payment. So when you enter into a lease option purchase or a lease to own program, typically there's a little upfront fee that's paid by the buyer to you to go towards the purchase price and ultimately towards your buyer's down payment. The next thing is escrow. We're not familiar with that here in Canada, but escrow, what an escrow is, it's a third-party intermediary who processes the transaction on behalf of the buyer and seller. So you know here in Canada we would use typically a law firm to handle the transaction for the sale or buy or the acquisition of your property. In the U.S. we use what's called an escrow company or title company, but we'll use the word escrow. Assignment. You assign the ownership to an investor for a higher fee. Assignment's not part of our program, but we have a lot of investors that do assignments. So if you want to assign your contract, you want to enter into a contract, you want to enter into a lease-to-own contract, and then you would like to assign that to another investor, you can do that and take an assignment fee. L.T.O, we'll use L.T.O through the portion of this presentation. L.T.O means lease-to-own. HOA means homeowners association. A lot of the subdivisions we're buying to specifically in the Arizona market right now, they're part of a homeowners association, which means that everybody's a member who owns a property in that subdivision, and there's a certain type of control that's put over the subdivision for the benefit of the owner. So homeowners association are a good thing. There's usually a small fee that's associated with it, anywhere from $25 to $100 a month, depending on the subdivision you buy in, and the amenities that are provided to the property owners in that subdivision. Some could be as basic as a playground and maybe some walls that need to be maintained and some landscaping. And others go as far as they've got a clubhouse, they've got a pool, a spa, these types of things. So it just varies and depends on what subdivision you buy into. Foreign national financing, that's a lending term used for borrowers who reside outside of the U.S. So if you're a Canadian and you got a financing program through Arizona Investar from one of our U.S. lenders, well, you would be entering into our foreign national financing program. Through the course of this presentation, the buyer, we're going to reference the buyer is the person buying the property from you. So it would be your tenant, your renter, or the person who you sold your property to by way of a lease-to-own contract. So they'll be the buyer. When we use the word investor or seller through the course of this presentation, that would be you. You would be the investor, or you would be the seller who sold your property under a lease-to-own contract to a renter/buyer. Program administration, Arizona Investar Corp. Manages the entire program. So we're the program administrator from start to finish, and we just don't provide you a great investment opportunity to get in the market. We actually walk you through and your buyer through the entire process, and we're there all the way to the end with you. The main purpose, excuse me, apologize for my throat today. This is coming off a little bit of a cold here. The purpose of INVESTAR'S L.T.O. program, or lease-to-own program, is first of all to satisfy our investors' requirement for preservation of capital, along with a stable return on investment. I think when we talk to investors now more than ever, their main concern is preservation of capital. They're tired of them having $100,000 in, say, a stock or a mutual fund, and the next year it's 95, and the next year it's 90, and the next year it's 85 and 80. And I know a lot of you on the program today are going, hey, I hear those words, and because it's happening to a lot of people out there. So their capital is being eroded, and it's being taken down from management fees and administration fees, maintenance fees from their current investment provider. So you really got to be looking at that and making some changes. And so first and foremost is preservation of capital, and the second thing is having a stable ROI or return on investment for our investors. The second thing is what we're going to do with this program is we're going to assist foreclosure victims, so people who are victims of the subprime mortgage, and of course we know there's lots of foreclosure victims out there. We're going to assist them getting back into home ownership while they're repairing their credit. So we think this is just truly a win-win situation for not only our investors, but also the people that are the foreclosure victims that are going to be buying your property, entering into lease-to-own contracts. I'm going to talk a little bit about the buyer-seller protection plan and benefits with our lease-to-own program. And we're going to go through that just on a couple of slides so you can really see what are we talking about when we talk about a protection plan and benefits. So let's just talk about that. We'll talk about the buyer protection plan first, and then we'll get into the seller protection plan. So for your buyers of your properties, well, there's a few protections here. The first thing is they're going to have a locked-in purchase price. They're going to know exactly what are they going to buy that property from you for. You're also going to be able to give them rent credits. So a portion of what they pay you every month is going to go towards their down payment. They're also going to be able to participate in appreciation of that asset. So as that asset appreciates beyond their base cost, they're going to be able to participate in the appreciation aspect. There's also a financial counseling component that's part of Arizona Investar's overall program, where the individuals are going to be able to get into some financial counseling if it's required for them. And for quite a few it is, because I think they made a lot of mistakes in the past. They got themselves underwater. They need to know how to come out of that and get stabilized. So with our program, we're able, through our third-party providers, we're able to provide some financial counseling to them and get them back on track. There's benefits to your buyers. The benefits is they can get back into ownership. They can, instead of saying, oh, I rent this house, they can say, a lot of them will say, I own this house, because technically they do by way of your lease-to-own contract. So there's lots of benefits. The other thing is that they're not going to have to move as much, because typically tenants move every 2.5 years with our platform. With this one here, they can get stability in their life, and it's going to help them out. So there's lots and lots of benefits to the buyer in this case. Lots of flexibility. If somebody says, hey, I'd like to close in 18 months, or I'd like to close in 14 months, or I'd like to close in 2 years, there's flexibility that they could have with you. And of course, it's got to work for you, because you're the one that's driving the bus. We'll guide you through it. But there's flexibility with this program. If somebody says, hey, instead of my rent-to-own credit being $300 a month, can we make it $500 and I'll pay another $200 a month? And I'm sure you'd be open to that. They're going to earn ownership through this program. So they won't technically own the house because the title will still be in your name. But through the course of this lease-to-own contract, they're going to earn their ownership of that property. They can move in now. They don't have to wait for 2 years to move into the home they're going to buy. They can actually move in now and then close the transaction in the future based on the L.T.O. contract. And then, of course, they can build wealth through home ownership. And we all know that more wealth has been created through real estate than any other form of investment in the world. So they can build wealth through the home ownership program. So there's lots of buyer protection here. Let's take a look at the seller protection. So what is your protection for you with the lease-to-own contract? Well, the first thing is you're going to have just a ton of demand for this product, and that's one of the reasons why we're creating this through the INVESTAR platform for our Canadian investors. Lots of demand. So what that means for you, it means that your home would be on the market less days because there's so much demand for it. You get a rent guarantee through the program. You get a guarantee coming in through your lease-to-own contract. So you got somebody that's going to be in there, and they've got a vested interest for your property and to pay you your monthly fee, and so you've got a rent guarantee coming in by way of your lease-to-own contract. Full property management. This is a fully managed property investment for you. So you got full property management all the way through the process. Fully managing the lease-to-own contract. You get to work with our team in executing the contract. We go through the whole thing. We provide qualified screened tenants, which will be your lease-to-own buyers for you. There's a fixed exit price for you, so you know what your fixed exit price is. so your profit's locked in. It's got to work for you. You've got to be comfortable with it. You're the one that makes those decisions. We just guide you down what we think would be the best opportunity for you. Comes with a home warranty. So when your buyer buys the property from you, we've arranged one of our providers is a home warranty provider in Arizona, and the actual home will come with a warranty to your lease-to-own buyer. So the warranty will cover certain things like plumbing defects. If there's a plumbing problem, it's covered under warranty. If there's an electrical problem, it's covered under warranty. If there's certain things that happen with the home, with the roof, it starts to leak, it's covered under warranty. So that's a good thing, and that's part of our seller protection program. The buyer has a vested interest in your property, so the chance of them trying to get out of the contract and because they like a house down the street a little better, it's not likely it's going to happen because they have a vested interest in your property. They want to pay you money. They want to close a transaction. They want to help you ultimately make money indirectly because they have a vested interest in the property. All transactions conducted are by a licensed, lease-owned, certified Arizona realtor. So all of our transactions that we do with you with this platform are done with one of our licensed, lease-owned, certified Arizona realtors that work specifically with us in that marketplace, and they're fully trained on the entire lease-to-own process, both from your perspective as well as the buyer, because they're the ones who have to educate your buyers in the program. Provide you flexibility. You know, if you're looking for a 2-year time frame for this investment, you want to ride that market back up, 2-year time frame, that's fine. If you'd rather have some at 18 months, 3 years, whatever it is, we'll customize it based on what you want. Provide you some financial security. You're buying into the real estate market, coming out of the bottom of the curve, extremely overcorrected market, so there's some financial security there. You've got somebody in your home that has a vested interest that's paying you money every month towards your down payment. Usually there's a small fee that they pay at the front as part of the initial down payment to get the program going. So there's some financial security here for you. You've got some asset protection. Your property will be, of course, insured by one of our third-party insurance underwriters. So in the event that something happened to your home, that you have insurance in your property, you have some asset protection there. You're locked in return. So versus more of a long-term strategy for investing in real estate and planning never to sell it, this one here, your return's actually locked in. So you'll know you'll sell it in, say, 2 years. This is going to be your cash-on-cash return at the end of the 2-year time frame with positive cash flow each month along the way. This is a fully managed process for you with our system. So with our turnkey system, fully managed for you from start to finish, and you've got a client concierge that would be dedicated to your account from INVESTAR to walk you through the entire program. So it's a fully managed process from start to finish. Some of the lease-to-own program buyer investors receive. So here's what they receive. First of all, the INVESTAR Turnkey Support Service Program from start to finish. We have, I think, what we think is one of the premier programs in Canada for this type of investment opportunity for our Canadian investors investing in the undervalued real estate market, specifically in Phoenix. You get access to our full legal support team that really specialize in lease-to-own programs and seller financing programs as well. So our full support team from a legal perspective to make sure that obviously the contracts are all done in a legal format that support the Arizona real estate laws. And it's really important that that it's done this way just to make sure that everything's done above board and it's legal. Transaction flexibility, kind of talked about that before. You've got some flexibility from a buyer's perspective, and you've got some flexibility from the seller's perspective. And we talked a little bit about that before. Freedom to move, so you got freedom to move your contract if you want to. So if you want to move the contract, say it came closing date, and your buyer says, listen, you know, I need another 3 months. Well, you've got the freedom to move that contract out 3 months and then close it 3 months down the road. You have the ability to do that. Financial security surrounding their transaction, I think both from obviously from a buyer's and seller's perspective, we have that, and no hassle service from our INVESTAR'S management team, and this is what we do full-time. We have a full team that's been doing this for years, so you have a full team that's dedicated to seeing your success. Talk a little bit about the target market. Let's talk a little bit about who is going to be your buyer for your home, who would enter into the lease-to-own contract with you. Well, first and foremost, foreclosure victims, and I can't get across enough how big that market is. You know, somebody who was in home ownership, and unfortunately they're not now because they were victims of the subprime mortgage crisis, what they want to do is they want to get back into home ownership. And the sooner they can do that, the better. And right now, it's difficult for people to get back into home ownership because if they're a victim of a foreclosure, typically they can't get back into home ownership because they need financing for about 3 years. So that means they need to be there needs to be a stopgap in between there, and they need to be a renter. And this program allows them actually to get into the home that they're going to buy. So there's just a huge, huge market there. And how we access that market is through our own network of our current tenants, as well as through the realtor network. So your property would actually be marketed on the MLS as a L.T.O. Investar program. And so we have our realtors that are all lined up, they're ready to go, and they'll actually be listed on the MLS as this. So any buyer who's looking at the MLS, they'll actually see your property that it's a lease-to-own option. People with credit difficulties. So if people can't get into a home right now because it's going to take them another year to clean up their credit, this will allow them to get into home ownership while they're cleaning up their credit difficulties. If they don't have enough down payment, so if they have not enough down payment, it usually prevents people from getting into home ownership, and this program will allow them to get into home ownership while they're building their down payment in your home. Maybe their job tenure isn't suitable and they don't qualify because of their job tenure. We'll look at that, and as long as they qualify under underwriting, we'll be able to get them through. And I think right now when you look at the timing for our L.T.O. program, I don't think you could ask for a better time. You know, we've been doing lease-to-own contracts for a number of years, and in normal markets. Here is an especially great time to do lease-to-own programs because there's just so many people there that are dying to get back into home ownership, and what a great platform to do that with the L.T.O. Investar program. Let's take a look at the step-by-step program structure. Let's take a peek at how that's going to work from a buyer's perspective. So this would be your buyer/tenant. Well, first of all, the potential buyer. Now, assuming you've already bought your Arizona Investar home and you've got your home, or you're in the process of getting your home, and we start to market to these buyers, they apply to our L.T.O. program. So we have administrators right in Phoenix that administer this program. So the potential buyer applies and says, listen, I want to join that L.T.O. program, and so they apply for it. And the potential buyer is evaluated against our underwriting standards. So we've got a full underwriting standard process that we run our buyers through. So if they pass that test, well, then they're a potential buyer. And then they go through a comprehensive credit risk evaluation just to see exactly what is their credit rating, and do they need some credit counseling, that type of thing, to get them back into home ownership. And then the potential buyer agrees to participate in the continuing credit counseling program if it's applicable. So that's step one for your buyers. Step two, if they pass through all the tests on step one, we go into full document underwriting. And that's basically where we take them and we wrap them all up. We know exactly where their credit's at. We know where their job tenure is at. We know what it's going to take for them to get back into financing, so how long it's going to take. So they work with our financing brokers to say, listen, this is what it's going to take for this individual to get back into the financing game. So we make sure they get on a plan to go through that, and then we document that into our underwriting process. Step three, the buyer selects a property from our L.T.O. inventory. So a lot of our investors are going to be joining this program, and so we're going to have a number of properties for the buyers to select from. And so they'll select a property that's suitable for them, and typically it's done per geographic region. So if somebody works on the west side of Phoenix, typically they'll buy their house on the west side. If they live in the southeast side, typically they'll buy a house on the southeast side. And so they'll select it based on, typically on geographic region, then what do they need for bedrooms and bathrooms and that type of thing. So because we are very, very specific in where we buy our assets, because we know where to buy our homes for our investors, we know where there's the most amount of demand in these areas. And we're not buying houses that are, you know, the $50,000 house in Maryville, which is not a very good area at all in Phoenix. That is not our asset class. We don't participate in that market at all, ever. It's a management nightmare. Even though it might look good on paper with the return on investments, it's actually not when you take into consideration the defaults on rental income, the repairs and maintenance, things like that. So we're buying into B-class areas, areas where there's lots of pride of ownership, typically 3-bedroom, 2-bath, 2-car front attached garage, 1995 and newer. And you know, there's just lots close to schools, transportation corridors, workplaces, things like that. So we're very specific in where we place our investors' capital. Step 4, lease period begins with client under credit management. So the lease period begins, and we just monitor the process. Step 5, lessee improves credit score, builds a down payment for permanent financing, typically within 24 months. So that's kind of the 5-step process that we walk them through. And if you look at the cycle wheel and you look at the process that they go through, here's kind of what it looks like. So if we start off at the top here, the investor buys a property, so that would be one of the first steps. Once you go through the evaluation process with us, you're going to buy a property, and then we're going to put in a qualified tenant/buyer with the L.T.O. program, and then we'll get right into the lease agreement and option to purchase or sign. So that'd be the L.T.O. agreement is signed with the tenant/buyer. the tenant buyer moves into the house, property management company maintains all the transaction records and provides the monthly distributions to you. And then the tenant ultimately becomes an owner, the investor cashes out, and then typically would repeat this process. Or help pay for your child's education, go on a vacation, build your retirement wealth plan. It's really up to you what you want to do. Our job is to get you in and get you out and get you paid. That's really what our job is, and that's what this program is all about. Let's take a look at how the numbers work. Let's take a peek at how the numbers work with this program. And what we'll do is we'll first of all start talking about what is the income side of things. So what's the income that we're going to see coming in from this program, and what is it going to be on a monthly basis for you? So let's take a look at that first of all, so we can see exactly what that is. So your monthly income will consist of, first of all, your base property rent, or what we refer to with this program as your interest income. And so instead of saying we're going to charge you $900 a month, what we do is we say we are going to charge you 6% of the sales value less your initial down payment. So in this case here, it would be 6% of the value. So if you bought a property for $100,000 and you sold it with no down payment, your income just on base rent or your interest income would be $600. And you may look at that and go, geez, well, shouldn't that be closer to $900 or $1,000 based on other properties that Arizona Investar has turned over? The answer is yes, but I'll show you how the numbers work here just in a second. So, and this provides also, from your buyer's perspective, they're paying you interest income versus paying you rent. So in their mind, they're already a buyer because they're paying you interest versus rent. The next thing is you're going to get a down payment contribution coming to you every month from your buyer. So every month as they're building up their down payment, they're going to pay you extra money every month to build up that down payment. We call that down payment contribution. They're also going to pay your property taxes, your homeowners association fee, and of course the property management. And this is really another strength of this program, is some of the costs that would typically be paid by you as an owner of a rental property are now passed on to your buyer. So your buyer will pay 1/12 every month of property taxes, monthly HOAs, and property management. So we're going to pass those costs right on to them because they would be, by contract, the beneficial owner of the property. So those are costs typically paid by you. Now they're paid by your buyer. So let's take a look at an actual property, assuming you used no bank financing. So let's look at a property that the investor bought for $140,000. So let's say that you bought this property for $140,000 and you sold it for $180,000. And sure, you can buy properties for $100,000 and sell them for $140,000, and you can buy properties for $120,000 and sell them for $160,000. I'll just use $140,000 as an example, and say that you sold that property under this contract for $180,000. And you might say, well, today the property is not worth $180,000. No, but in 2 years, it probably is going to be worth close to $180,000 based on the recovery analysis. And that's why investing in the Phoenix market right now is so powerful, because you're going to take advantage of that accelerated appreciation uptick as we get to the normalized trend line. For those of you that have been on our previous education webinars on the Arizona market, I talk about accelerated appreciation. Should we talk about normal appreciation through 30 years being 4.5%? We understand that. It's proven. But what we've got now is an overcorrected market, and we're going to have a drastic accelerated appreciation up to the normalized trend line where prices should be, because we're still in an overcorrected market. So this is just a great opportunity for you to get in and capitalize on it, and this is how you're going to be able to cash out in 2 years and make the kind of money we're talking about here. So let's say you bought it for $140,000 and you sold it under contract today for $180,000, no bank financing. Here's how the numbers work. You're going to get a base property rental income of $900. So let's say you bought the property for $140,000. So let's say you bought the property for $140,000, you sold it for $180,000. Well, your buyer has a purchase price of $180,000 at 6% a year, simple interest paid to you, divided by 12 months in the year. They're going to pay you $900 a month. So it's $180,000. They're going to get 6% interest, 12 months, $900. And you may say, well, geez, can I really get 7 or 8%? Absolutely you can. But I'm always going to use conservative numbers for our presentations, because I want to make sure that I don't want to overpromise and underdeliver. I'd rather underpromise and then overdeliver to you, and that's kind of how we work. And I don't want to lay out unrealistic expectations. So that's what your rental income would be, just from your interest income. And then you're going to have your down payment contribution towards your down payment account. That'd be $300 a month on average. Sure, it could be $200, and sure, it could be $500, Just depends on the type of buyer that we have. Next thing is the property taxes, about $100 a month for that type of property, and so they'll pay for those on a monthly basis. Their HOA fee, $50 a month, and property management, $100 a month. So the total rent and interest income per month that you would see would be $1,450 per month. So that's a great income, and it's great to see that you get that down payment contribution coming in on a monthly basis. So total income, $1,450 per month, and now let's take a look at the monthly expenses. So here's what your expenses would look like. Again, assuming you had no bank financing. So what you did is you actually paid cash for the house. Now, half of our investors pay cash for the properties, and the other half get involved with our financing program. And I'll talk about financing in a couple of slides, but for the purpose of this exercise right now, let's assume that you paid cash for the house and you paid $140,000. Your monthly expenses would look like this. Of course, now you got to pay the property taxes. Even though you got the income from your buyer, you still got to pay the property taxes, so you're going to pay those. That's $100 a month. You're going to pay the HOA fees, that's $50 a month. You're going to pay the property management, that's $100 a month. And then the program administration fee to administer all of the paperwork and do the disbursements and pay the taxes, pay the HOA, pay you, and oversee the entire program, that's $208 a month for the lease-to-own program administrator. And you'll have your own administrator that you talk to with this program, and they'll deal directly with your buyer and with you. They work as the intermediary, and that program administration is $208 a month. Total expenses, $458 per month. The total cash flow per month for you, $992. So really good cash flow coming off of it for you. So it's a great program for you to just get the positive cash flow coming in. So let's take a look now that you ran this out 2 years. Let's take a look at how does this work for you at the end of 2 years. Again, with no bank financing. Take a look at it. Well, your sale proceeds are $40,000 because you bought the house for $140,000 and you sold it for $180,000. So your gross sale proceeds is $40,000. The rental income that you brought in, that'd be $34,800 because remember you have the $1,450 coming in per month for 24 months. Your total income, $74,800. Now let's take a look at your expenses. Well, you remember that they were paying you $300 a month for 24 months. Your down payment account, what you built up in the down payment account, to the credit of your buyer is $3,600. So you got to give that back to them because they built it up. It's their down payment. Well, they don't have to give it back to them. They'll actually come to you and you'll keep it. But it's in their account. It's in interest, but it's in your control. You're going to pay the property taxes. You're going to have property taxes of $2,400. Your HOAs that you're going to pay over 2 years is $1,200. Your property management is going to be $2,400. Your program administration for the L.T.O program is $5,000. Realtor commission, because remember I said the buyer came in through the MLS, is $9,000. Now, if they didn't come in through a realtor, well, you would save that commission. But I'm always using the highest case scenario. Let's say you did use a realtor brought it in, and the realtors who bring you in your buyer today, they're not going to get paid their commission when they move in. They're not going to get paid their commission until the deal actually completes in 2 years. So let's say the realtor commission was $9,000, and then closing the escrow was $800 to close the escrow transaction. Your total expenses was $24,400. So you had your total income, $74,800, total expenses, $24,400. So you have a total gain in this property over 2 years of $50,400 against your original cash investment of $140,000. That means that you have an annual return on investment of 18% based on an all-cash acquisition. So not a bad return on investment considering the what you get at the bank these days is about 1.5 to 3%. And of course, if you look at what's happening with the stock bonds and mutual fund market, or what's happening with your RSPs, not even close. Like they're not even close to these types of numbers. And so it's pretty important to see. Just going to jump in. We see I have a couple questions that have come in now. Let's take the first one that came in. First question that came in and said, how do you make sure that your appreciation rate is realistic over the length of the program? You know, there's no magical ball that says, hey, here's exactly what the appreciation is going to be. This appreciation is based on how far below market we are right now. Right now, the Phoenix, Arizona market is extremely undervalued, and we're in one of the strongest growth and job markets in the U.S. I think right now it's ranked 8th in the U.S. as far as job growth goes. It's projected over the next 20 years to be second in the nation for population growth. So when you have population growth and job growth, there's going to be the requirement for new housing, and a used house is typically about 85% the price of the new house, and it has to be at that level. Like prices have to pull up because they're way too cheap. They're way under where the market should be, and so that's how we know that's how that value should be in 2 years in that range. Now again, there's no magic ball. We can't guarantee that, but based on our analysis and based on being in that market and being in the real estate business for almost 30 years, we've got a pretty good understanding as to where this market was and where it's going. And we've been in and out of these boom-bust markets in Arizona for the last 3 economic downturns. So we understand that very well. So we understand that whole process real well. Another question that came in and said, how long is the rent-to-own program? Typically 2 years, or could it be more? Absolutely, it could be. Typically, 2 years is a pretty good average, but I've seen rent-to-own programs that are, that are going out 4 years. So it could be longer if you'd like it to be longer for that program. Another question that came in and says, can you please elaborate on what is included in the administration fees? Absolutely. What happens is we have a program administrator that walks you through the entire program and deals with any issues that come up. And they also provide the distributions on a monthly basis. So they do the program setup, and then on a monthly basis they collect the money from your buyer. And then what they do is they make sure that the taxes get paid, they make sure the HOA gets paid, they make sure that the insurance gets paid, they make sure you get paid, and they administer it on a monthly basis. What they also do is they go through and they deal with any issues that come up through the course of that program. What they also do is they administer the credit restoration program as well. And so they will make sure that that your buyer is working towards home ownership. So they make sure that they're going through their credit counseling program. They work with them on a quarterly basis and evaluate their credit score to make sure that their credit is improving, that they are paying their credit cards on time, that they are paying that car loan on time, and that car is actually getting paid off and needs to get paid off. They also work with our mortgage broker division to make sure that we're moving along the lines to get them set up in home ownership. So it's pretty involved, and it's pretty cheap actually for somebody to take care of all that work for you and making sure that you're going to have a buyer at the end of the day that can actually close the transaction. So it's a really involved process, and that's what they do. So it's just a great way that you can have really an armchair, hassle-free investment for yourself. Now, we talked about this investment so far being an all-cash investment. Well, let's take a look at the scenario if you use leverage. So let's look and say that you bought that same property for $140,000, and let's say that you put on financing on this property, which half of our investors currently do right now. So let's say you put on a 65% mortgage, which we call LTV, loan to value. So it's 65% mortgage based on a $140,000 purchase price. And let's say that the interest rate is 5.5% with a 30-year amortization. And you may go, well, why can't I get that 3.5% rate that they're offering Americans? Well, the reason why you can't is because you're not American. Is because if you're a Canadian, you're going to be entering into what's called the foreign national program. And when you're a foreign national investor in another country, you can't get the native rate. So you can't get the 3.5 to 4% rate that Americans would get to buy their own single-family home. And so the rate right now that we're seeing on average is about 5.5%. And sure, you might be able to get it at 5.2, or you might be 6.5, depending on your own qualification with our financing program. So, but it's just based on who you are, what your credit is, whether you have any activity in the U.S. or not with other banks. And so I'll just choose an average of 5.5. So in this case here, let's take a look if you did use financing, and I'll show you the power of leverage. And I know for those of you that have watched some of our previous webinars, we've talked about the power of leverage and what can leverage do to enhance your returns. And real estate's just a great thing because you can use somebody else's money to buy the property. And it's pretty tough to do that with a stock. So if you went to your banker and said, Mr. Banker, I want to buy $100,000 worth of stocks, can you give me $65,000? They'd say, not a chance. But what they would say is they say, well, do you have any real estate maybe I could secure that money against? Because they understand the security of investing in real estate. So, with real estate, you can actually use somebody else's money. You can actually use the bank's money to buy your real estate. So it's a great thing, and we have a whole program that supports that through our financing division. So, so let's say you did use financing. In this case here, you put 35% down, and your sales proceeds will still be $40,000 because you bought it for $140 and you sold it for $180. Your rental income will still be $34,800. Your income will still be $74,800 gross income. But let's take a look at your expenses. So your mortgage now, your principal interest payments for 2 years in your mortgage will be $18,960. Your down payment account, what's built up in your down payment account, would be $3,600. So it would be exactly the same that you had in there to begin with. So that's what that would be. And then you would have your property taxes at $2,400, your HOA fees at $1,200, your property management at $2,400, your program administration fee total $5,000 at the end of 2 years, realtor commission $9,000, buyer and closing escrow about $3,900, and your total expenses in this case would be $46,460. So you may go, well, why am I buyer closing escrow so much more money for buying and closing through escrow $3,900 when it was $800 when I didn't use financing? And the answer to that is this: is in the U.S. when you bring in bank financing, your escrow fees are a lot more money. I'll show you that it's definitely worth you doing that, but it's a lot different than it is here in Canada. And here in Canada, it costs $1,000, $2,000 to close your transaction. In the U.S., because of the buyer's policies, and that would be the title insurance that is required not only for you but also for the bank, it's just a lot more money. The registration fees with land titles is a lot more money. So we have to include this expense line item in here when you use financing. And so your financing closing costs for escrow would be quite a bit more money. So in this case here, you're going to have expenses of $46,460. Now remember, you're only putting down $49,000, not the $140 as the previous example, because $49,000 represents the 35%. So let's take a look at the ROI on this one, if you use financing. Your total gain in this case would be $28,340. Your original investment, like I said, was $49,000. Your annual return on investment, 29%. So that's a lot higher than the 18% if you just said, I'm just going to pay cash for the investment. That's the power of leverage if it's used correctly in real estate investments, in well-timed and well-selected real estate markets. And that's really what we're all about at INVESTAR. So that's the power of leverage. So I wanted to show you the difference between your return on investment if you didn't use financing and the return on investment if you did use financing, because it is quite a difference, right? So it's a big thing. So I just wanted to show you that. The overall benefits of the INVESTAR L.T.O program, and I think this is the reason why we've seen so much success with this program in the past, and now being just launched in the Arizona market for our Canadian investors. I think we're just going to do real well with it for our investors. First of all, investors receive income every month. So every month you get your check. The investor has fixed exit plan. So you know how you get in, how you get out, and how you get paid. The investor receives more net monthly as buyer pays operating costs, typically paid for by the investor. So we talked about the taxes being paid by your buyer. We talked about the homeowners association fees being paid by your buyer. We also talked about the extra $300 you're going to get paid towards their down payment by the buyer to you on a monthly basis. So they're building up their equity in the property. They're building up their down payment. So that ultimately means the buyer has a vested interest in the property. And then what you're able to do, and what a lot of our investors are going to do, I already know because I've talked to so many over the last just a couple days, is they want to buy multiple properties. They're saying, how many can I do? And a lot of our past investors are coming on board saying, hey, I want to get on this right away. How many can I do? Let's get it set up and let's get going. So you can actually multiply the system, and we call that velocity. The more times you can do the same thing over and over again to create positive results, it's positive velocity. The more times you do things over and over again, it's just velocity. So let's try to do this as much as we can for our investors that really want to maximize the impact of this program. And if you use the financing program that we have, then you're able to buy multiple properties. The types of real estate investments, of course, a lot of you that are on the line today, I see that we've got a lot of our existing investors on this webinar today, and I see we also have a bunch of quite a few new people as well that are new to the Arizona Investar platform. So we've been known predominantly to be investing in single-family homes in the Arizona market, and that is true. You know, I think right now we are under property management. We're about 1,500 homes with our property management company under management, and we've got about $26 million now in that market just from our Canadian investors in the single-family home asset class. Now we are shifting into condominiums and townhomes because we're seeing those now. We're starting to see the prices of the single-family homes are starting to go up. The next asset to follow that will be the condominium and townhome market. And so we're starting now to acquire condominiums and townhomes for our Canadian investors. And then, of course, the following right after that, we're getting right into our apartments, which we've already started, and doing joint ventures with our Canadian investors to buy apartment homes, apartment buildings, and get the multiple units going that way. So those are bigger types of syndications that we do with our joint venture club. So that's pretty exciting. But really, for this program, what we're talking about single-family homes and condominiums and townhomes. Arizona Investar is what we call your turnkey real estate investment team. So what we do is we provide the entire operating platform to allow you to access real estate investments. In the past, real estate was always difficult for investors to get into because they couldn't do it. And if they did, 80% failed because they bought the wrong house in the wrong market at the wrong time. They got the wrong financing. They didn't get the foreign tax exchange. So what we do for our investors and what we've been doing for years is, first of all, market research and analysis. That's number one. So before you even step foot into investing in real estate, you've got to know the market. Jump on our programs, jump on our tours, come to our live events, and understand why are we putting so much capital right now into the Arizona market. You need to come to a conclusion yourself to say, I agree with that, with what they're saying. I agree with their analysis. And so market research analysis, we provide that to you. So you really got to learn that. Understand our property selection process. We have a very, very specific property selection process that we go through as far as what homes are we buying, or I should say properties. What properties are we buying, in what areas, at what price, based on what type of financial analysis. So property selection is very important. We have a full renovation team that works with us day in, day out to make sure our homes are going through the renovation process. If somebody calls up and says, hey, I need to have my dishwasher fixed, no problem. Somebody's there within 24 hours to fix it. Cross-border tax specialists on our team. It's very important that you go through that program, especially if you're a Canadian investor investing in the U.S. Get that tax advice. And quite frankly, if you're a Canadian investor investing in Canada, you need tax advice as well, because it's very, very important you go through that tax consultation. We have Canada and U.S. mortgage lenders that work with our investors. We have a full property management. We have a full Lease-Option program administrator that administers the entire program. Full property insurance, foreign currency exchange. We consult you with who to use and who not to use in that case. We provide full investor reporting, and you would have your own investor concierge service program provided to you. So you'll have one contact person you talk to walk you through the entire program and also make sure they're there with you all the way through the entire investment cycle for you. So we're a full turnkey real estate investment provider, and we've been at it for years. So it's a full turnkey system. What this does allows you to now get involved in investing in real estate. Now, some people might say, well, I do invest in real estate, invest in REITs, real estate investment trusts. That's fantastic, but you're playing the retail game. The profit's already taken out of it. So it'd be like you buying the house for $180 versus $140. So you're buying the house at retail, and then, of course, you get whatever income stream that strips off it. Here is more of a wholesale type of opportunity for you to get right in on the ground floor and buy direct at cost. So how to get started with this program? First thing is talk to your client, talk to our client care department, and talk about the program. And then what they'll do is they'll register right away for the INVESTAR one-on-one initial orientation. So it's one-on-one with you, with your concierge who comes from the client care department, and they'll talk to you about your specific investment objectives. And they'll walk you through the entire process from foreign tax consultation to foreign national financing, and really get into defining your investment objectives. And we have investors that say, listen, I want to buy, because it's such a great time to buy right now, I want to buy a property right now, and I don't ever want to sell it. That's fine. You won't be part of the Lease-Option program. You'll be part of our standard rental program. We'll get a great tenant in there for you, and you just hold it, never sell it. Somebody else is going to pay down your mortgage for you, and then you'll have just nonstop cash flow forever. It's like the tree, the money tree that produces income and doesn't stop, and that's the true definition of wealth when you go through that program. Through this type of program, it's more of kind of a flipping kind of program because you're flipping your houses. That's kind of how this works. And if that is your objectives, well, then you're part of the lease-to-own program, and we get you a good buyer in there and somebody who's going to take care of it at the end of the day. And so really, what is your investment objectives? We also have some investors that say, listen, I want to buy now because the market's low, and I want to buy my second home now because I want to have a second home in Phoenix, but I got to buy now because the market's so low. But do you think you could maybe rent it out for me for 3 years before I want to use it as a second home? Absolutely. It's a small part of our market, but there's still the Canadian investors that would like to do that as well. So we have lots of programs available. So it's really defining what is your investment objectives. And then the next thing, of course, is to select the approved property based on the investment objectives. And so we go through that and then close the transaction and then hopefully repeat it for you a few times. We'll go through some questions. So here's some of the common questions that we get with the L.T.O program. I think the first thing is, who administers the transaction? Arizona Investar through our program administrator. So we administer the entire program for you. Next question would be, what if the property is worth more than $180,000 in 2 years? Who gets the benefit of that? Well, the buyer gets the benefit because they have a locked-in price with you at $180. So if it's $190 or $200, well, then they just made $10,000 or $20,000 walk-in equity when they actually close the transaction for you. Let's look at the reverse, though, and And what if it's less than $180,000 in 2 years? Well, the buyer or seller, you can void the transaction, and you just give them back their money that accrued towards their down payment account, or you would mutually renegotiate the price or terms based on the new appraised value. And this is all stipulated into our lease-to-own contract. So we have a very, very specific lease-to-own contract that you'll enter into with your buyer, spells all of this out. So in the event that the value is not there, say that people quit moving to Arizona and snowbirds quit going there, and it's no longer a big growth state that it is, and things go sideways, well, then you just renegotiate the contract. So you're able to do that. But you know the good thing is you still have your property. So no matter what, you have title to your property, it's your property, and if they don't complete the transaction, well then if they walk away, because that's the next question, what if your buyer walks away? Well, the seller retains the initial down payment along with all the rental credits. And so of course that would just increase your ROI for that property, and then you could just turn around and enter into a new L.T.O. contract with another buyer. How long has this program been in existence? Well, lease-to-own contracts, rent-owns, option contracts, they've been around for years and years. And what's happening right now is this is becoming more of a recognized way for individuals to get back into home ownership. We see it happening more in Florida and Atlanta than we do in, say, in the western part of the United States. But we're bringing it into this market because we just know it's so powerful, there's so much demand for it, and how it's going to work for our Canadian investors to really impact in a positive way their overall return. So it's been around for a lot of years. We've been doing it for a lot of years, and we're real familiar with the program. And so what we've done is we've just added a couple of members to our turnkey system team that really specialize in lease option contracts or lease-to-own contracts. So that's what we've done. So it's just worked out real well. Feel free to join up on our tours. This is a tour that we did in January 2012, and actually we just got back from a tour. We just did a property tour last Friday. We had a few people down there, and it was a great tour, good education in the morning, good market analytics, so everybody understands kind of where is that market at now. And then I think we had a good Mexican lunch there, and then we hit the road and looked at some great properties on the east side of the valley. So we just put on regular tours on a monthly basis, and it's just really informative. So if you want to come down and you want to attend one of those, you're more than welcome. You don't have to, but you're more than welcome to do it and join in on that. Make sure you also check on our website under our webinars and join in some of our webinars. I think our next one we've got coming up is Retire on Rental Income on May 29th, and It's Your Money on June 9th. And we've got a couple live events coming up in Burnaby, BC on June 7th, and another foreclosure buying tour on June 23rd. So so please do make sure you attend those and come on in and put that together. A couple questions came in. I'd just like to go through a couple of the questions that came in. I see we got probably about 25 questions that came in, so I'll go through just a couple, just for the sake of time, because I like to be on time with everybody. Because I said we were going to be about an hour on this presentation. I don't want to take up too much of your time. Any of the questions that are on here that I'm not able to answer due to the sake of time, we'll make sure we get those off to you tomorrow morning from our client care department. And so a question that came in that said, is the $140,000 price a discounted purchase price from the current market value, or is this the current market value with a 43% markup above the current market value, bringing us to 180? No, your price is the 180, like the 180, sorry, the 140. The 140 is the current price today, and that is the current market price today, and that's an undervalued price. And if you've been watching what's going on in the Phoenix market right now, it's getting pushed quite heavily right now. So 140 right now is the price, but it's still an overcorrected price, and so that's going to be the cost of the home today. And we're seeing that market should be in these houses. They should be right around the 210, 220 range. And so saying 180 in 2 years, I think is very realistic for that. And the buyers right now are standing in line to sign those contracts. And so no problem there. What are the costs for the foreign tax consultation? It's part of our overall initial orientation program, and who can walk you through that would be your client care representative. So feel free to talk to our client care department, and they'll walk you through that initial load-up process to get you ready to go. Another question that came in says, can you explain how does the timeline between buying the property and getting the L.T.O. property? Typically, it takes about 30 days through that process. But what happens is when you're going through the process and you've secured your house, we already start marketing it to your L.T.O. buyer. Our time frame right now, from the time that we secure the asset, get the rent-ready work done, and have a tenant in place, we're 28 days on that side. With the L.T.O. buyer, we're about probably about 30 days. And because we're marketing through our own system as well as through the MLS network with our licensed L.T.O. realtors, and we have access to the MLS, I think right now there's probably about 20,000 buyers that would be suitable for this type of home. Is our $140,000 buying price the current retail price, or is it below the current market value? It's probably just a touch below the current market value, and I'm just using 140 as an example. So you could still buy a house out in Buckeye, which is quite a ways away. Still an active market. There's still a segment of the market. We watch how much exposure we put in that marketplace as far as inventory goes. But you can still buy a house out there for for $110,000. In the greater Phoenix area, it now is a great time to step into this market because we're just coming out of the bottom end of the curve, and it's a good time to get in. Are the prices firm? Well, yeah, the prices are all locked in as far as our prices go because we just work on a fixed margin. So ours are real low. Your price is fixed from the retail side. We give a pretty good eye shot as far as where we think you should be in the price range. So if we say I think the price on this is going to be in the 180 range, we give a recommended price, but we also need to make sure we're fair to your L.T.O. buyer. Like if we think it's going to be worth about 180, and you say, well, let's go in at 220, it's not going to work for us. Like it's just we can't play that kind of game with our L.T.O. buyers because we just don't know if that's going to be a realistic number we can achieve. So it's interesting. Another question came in and said, if I already have my own buyer in place, can I put my own buyer in? Absolutely, you can. No question. You can for sure do that, and we can facilitate that for you. So that's it there. I see we still got lots of questions to go. I still see even more questions are coming in. So what we're going to do is I need to cap it off because it's getting to be on the 1 hour time frame here. And but it's just I think with this program we're going to see obviously lots of Canadian investor interest, and with our system we have with our proprietary buying system as to how do we buy our houses in Phoenix and get them ready for the Canadian investors. I just I don't know any other company in Canada that really has the kind of depth or experience or the program or team that we have here, and we make this available to you, and just a great opportunity for you to access some well-selected, undervalued real estate. So we're starting to get into condos now, and a little bit on the multi-side of the joint venture club, and so feel free to talk to your client care representative about the opportunities that are available to you to invest in this market. Feel free to jump on our future webinars and our live events, and that pretty much wraps up the program today. I want to thank everybody for coming on board today. We just had a tremendous turnout today for this webinar, and so on behalf of myself and Chad Butler, who helps us put these together every week, and Kerry Smith on the marketing side, I want to thank them for doing that. And like I always say, live where you want to live, but invest where the numbers make sense. And on behalf of all of us at Arizona Investar, thank you very much, everybody, for joining.